Good morning, everybody. Welcome to today's Morning Blast. You join myself and the awesome, the glamorous, sexy Mr. Michael Brown, who was one of the few people to pick up this morning that the good news regarding UK GDP, the beat, was all down to one thing, the Jaguar Land Rover, which we'll come on to shortly. But as usual, I'm sure everyone already knows this, but this is Morning Blast. This is where me and Michael tear apart basically mugs that we see on online. We delve into the numbers. We tell you what's been going on in markets. We hopefully brighten your day up, take you a bit of news, bit of market action, plenty of swearing, etc., etc. Nothing we discussed on this podcast is trading, investment advice, etc. Think of it as bar side rather than fireside, etc. Michael, how are you doing?
Well, very good morning to you, Ryan. Good morning, everyone. I am not too bad, actually. Not too bad at all. I was up at 3:30 this morning reading about mortgage-backed securities because I couldn't sleep. But apart from that, I'm all right.
And do you know what? I woke up to go for a pee because I'm getting to that age at about 4:00, and I saw you tweet, and I was like, "What the hell is he doing?"
Do you know what? I actually feel quite old this morning because I was just chatting in the office with one of our young lads who is saying, "Yeah, how are you?" Whatever. And I was like, explained exactly what I just did to you. And he went, "Yeah, do you know what? I woke up at 4:00, absolutely drunk out of my head because I was out last night." I'm like, "Yeah, how it used to be, eh? Like last Tuesday."
Well, quite. Yeah. To be honest, yeah. But waking up and then instead of counting sheep, reading MBS reports. Yeah, we're different people, mate. We are very different people.
Well, I think we knew that. As much as you're trying to make me morph into you, Ryan, you haven't quite succeeded just yet, mate.
I love the fact that you said not quite succeeded, because we all know, and friends of ours, mutual friends of ours, often comment on what a good job I'm doing, turning into an absolute monster. But enough about our social lives.
Well, indeed, because we've got Clive back.
We've got
Clive
found
back. Your spam folder in your emails?
And it was in my spam folders in my emails yesterday. So apologies. Shout out to our good friend Mr. Lambert. He is back from Australia. So a quick wrap of the charts, so we can see what's been going on in markets and levels to watch. A bit of red yesterday, and also I'll post this up on Twitter as well, so people got access to the full chart wrap. But the breakdown basically is equities first. Bit of red yesterday, but nothing trend changing. Still bullish overall. FTSE, the exception, made new all-time highs again. S&P, that pulled back to the 69.23 level, but where buyers stepped in. The DAX, that broke a 13 green candle, almost unheard of run, and it was red yesterday, and it is again this morning at the time of pixels.
For
those unaware, when you talk about pixel time, that's us kind of taking the mick out of our good friends at News Corp, which use that for then they go to on air when they announce.
I know that Linz has yet to get that one past his new editors at Bloomberg.
Oh, God, if he
thank you to them.
I don't know if you follow him on Instagram, but I'm getting really pissed off with lunches at his desk with a very unceremoniously placed Bloomberg keyboard in front of him.
It's not actually his. It doesn't work. He's not plugged into anything.
He's actually the janitor. But there we go.
But Sorry, Linz. Morning. We love you, really.
Morning. We love you. Right, in bonds and FX, Bund futures, the German government bond, they broke through resistance at 128.34, scoped for more upside. Dollar yen trading at levels last seen when it topped, in 2024, when it topped 161.95. When was that? Hang on, that doesn't feel right. Oh, yeah.
It was July 2024. That was just before the last intervention round.
Do you know what? It's because I forgot we're in 2026. I was like, surely. That's why I was like, hang on, is that date wrong? Euro dollar, and I've not even had a drink in about a week. Maybe that's the problem. Euro dollar might be forming a head and shoulders weekly top on the weekly, but no signal yet. Bitcoin having a good week now, eyeing resistance at 98,000. Metals, gold, this yellow metal, obligatory, yes, have to say that, made another new all-time high yesterday. Saw some selling, but only light. Silver got up to 93.70 before pulling back overnight. No stopping that one. Keep your dip buying boots on, according to Clive. Yeah, that is getting a bit ridiculous now. It's getting to the point where it's getting so parabolic. I'm expecting to wake up one day, check the silver chart, and it's actually going left.
Well, this is it. But the problem with silver is, and I fully agree with you, it's got ridiculous. I mean, I remember writing a note, it can't have been more than 3 or 4 weeks ago now, saying, I think we were trading at 60 and kind of going, 75-ish, maybe. That's where the Hunt brothers were looking for, all kind of finger in the air type stuff. But then, now it is purely one-way traffic.
Yeah.
I think if you speak to, and I'm not one of them, but if you speak to the guys who are really sort of at the coalface in the silver complex, what we're seeing is not necessarily speculative. It's just almost mechanical and being driven by physical shortages and such like.
Well, quite.
Well, I was just going to say, just lastly, from a trading perspective, it's one of those where, and again, not advice, but if you've been long for a while, you're probably thinking about getting out. But if you're not involved, you're certainly not thinking about trying to short the thing because it could go 20 or 30 bucks further out of your favour.
And this is it, right? I think, like you said, calling it a mechanical rally at this point, I think it's incredibly accurate. And, we will go on to other subjects. But it does feel to me like now, and this is no indication on timing. I'm a big fan of big numbers attract. My bet on is it does get to 100 at some point.
Yeah, I think it probably would.
Only because of big numbers attract. That's like, that's a saying in markets as old as Michael Brown. And he's really old. But it is getting to that point now where the only way I can see this ever kind of normalizing is if there is a proper blow off top and then a proper catastrophe and an absolute collapse. I don't think we can walk this market back now. You look at any markets that have had such a rally like this, it always ends in tears. But the timing is something that, I'm not going to put my neck on the line and guess that. I mean, It's been a great watch, but like you said, it's getting to the point now where people are being forced to buy because there's shortage cover or, because there's options to hedge and stuff like that. And then when that starts snowballing, that's when it turns into a bit of a monster. And I believe that's where we are at the moment. But we'll see.
Well, the other thing on that, just don't want to turn this into a silver program, but you think about sort of context on what we're seeing. At one point overnight, silver was down by about 7% or so. And that took us to basically a 21-hour low.
Yeah,
it's
insane.
It is ridiculous how far and how fast this
again, not to make the show all about silver, but it's starting to remind me of when the Porsche. You're too young for this, but if anyone wants to do a bit of a market history, look what happened to Porsche and VW shares. Well, specifically Porsche, when there was a massive squeeze on that, and it just went absolutely insane. And it was quite a time. In fact, I might put a little blog post out about it. But it was a kind of similar vibe to this. It's like literally just a mad scramble to cover. And that did end in tears, but it was absolutely carnage for a week or so before it did. But anyway, moving swiftly on. LME copper made all-time highs yesterday. I've been a big fan of copper for a little while now, so I'm pleased about that one. Little one in the PA. Nickel on a tear, printing levels last seen at June 2024. Energy markets, before I hand over to Michael, WTI and Brent, obviously the oil benchmarks on the move, quote resistance levels that have been capping for a while, but yesterday was mixed, some doubts on sustainability. Obviously you got Trump headlines and whatnot also just in the mix of banging the markets around $1 here, $2 there, but one to keep an eye on. EUA, get me creeping, carbon markets, I should have just said, continues bullish run. That's 92.36 yesterday, highest since 2023 for the front month. TTF, which is European gas benchmarks, that started the week with a 2 gap up opens, hit key Fibonacci resistance at 32.95. Watching closely today where that goes. I'm a big fan of the TTF gas market. I think that doesn't get as much love as people should because I think it's a good market to trade. Everyone's focused on the Henry Hub nat gas. But if anyone wants to get especially on this side of the pond, if anyone wants to dip their toe in that gas markets, I would look at the TTF. But there you go, that's me. I think you can trade it on Pepperstone as well.
You can't, actually, I'm afraid.
Oh, it's a shit market, don't ever look at
it. Worst fucking market in the world. The other thing I would say is if you are so tempted to, quote, dip your toe into that gas, then do it quickly before the men in white coats come and cart you off.
Well, maybe this is why I have had a few psychotic breaks.
A few. Yeah.
Over to you, my friend. Thank you. Thank you.
Cool. Thank you, Ryan. Just a couple of other sort of tidbits in terms of markets before I move on to drivers from yesterday. The first is actually, I was reminded a couple of minutes ago, this was just before my time. It's 11 years today since the Swiss National Bank abolished the 120 peg in Euro Swiss.
Oh, you stole my thunder.
Well, you didn't give me the heads up.
I've got a cake and everything.
Oh, well, I will stop there.
No, go for it. No, go on.
Well, I don't have a take, so I'll let you deliver that. But I was just going to say it is.
I said eggs.
Oh, right. Sorry.
No, go for it, mate. Go for it.
So, yeah, of course, the Swiss National Bank, they used to have Euro Swiss pegged at 120. I think it was about 2 or 3 days before this, they actually came out and reaffirmed that, the peg is still in place. We're going to defend the currency, blah, blah, blah. And then in the morning of the 15th of Jan, they decided, actually, we're not going to do that anymore. It's too expensive. We can't afford to do so. And I can't remember the exact high and low because, of course, in markets like that, you're never going to get an exact print, but somewhere between 35 and 40 big figures in literally the blink of an eye in terms of the market move. And I believe it is still by far and away the biggest ever one-day move that we've seen in G10FX. And I would wager it's probably going to remain the biggest ever one-day move that we've seen in G10FX for quite some time to come.
If anyone wants to come and buy me and Michael Brown a pint at any time, I can tell you from the coal face on that day, because I was there and I was monitoring cash FX on a risk desk. So I've got some wonderful stories about that. And that was psychotic break number 3.
I mean, there's many issues with that, isn't there? I mean, one, Ryan Paisy running wrist. Jesus.
But I did right. It was only because I had a link, telling too much obviously, but I had a line into Goldman's cash desk, and it was only because the guy on the desk is a good friend of mine that he bothered actually picking up the phone to me, and he literally said, "Ryan, you can see the market. Do fuck off." And but then, to be very dear, but he was right to say that, because I had no right calling him up and asking him for a price, because there wasn't any prices. I've got to say, just for anyone wondering what we're talking about, it's the only time that I can ever remember, and I've traded through the GFC, Amaranth going bust, a couple of wars in the Middle East, etc. It's the only time when I've seen a market with literally a cash market such as FX, with literally no bids and offers in it. There was just no, and this is not on some tin pot poker. This is directly on the CME. And
everyone just pulled everything, didn't they?
Yeah, it was the scariest fucking time, because we had people running as we didn't know what the whole firm's position was. We didn't have, it was, you had no idea what was going on for about 5-10 minutes, and then it just got very scary. But anyway.
I was going to say, we're not going to talk about that one, because we would be here all day. The other thing I just wanted to touch on very briefly before getting on to some catalysts is, obviously we did see a bit of a lurch lower in the equity space yesterday. Naturally, every man and his dog running around trying to find a narrative for that. To be honest with you, there's not really, or as far as I can tell, maybe there's not a particularly obvious smoking gun or single one driving factor behind what we're seeing. Instead, I think it's just the fact that over the last kind of 2 or 3 trading days, and also the back end of last week, there's just been a hell of a lot more uncertainty thrown into markets than we'd previously been expecting. Of course, we had all of the geopolitical shenanigans in the Middle East, the DOJ sending those subpoenas to the Fed. Earnings have been a little bit rocky, particularly with JP Morgan on Tuesday. You've obviously also got Trump trying to cap credit card interest rates. And I think what we're really just seeing is the market kind of trying to grapple with that and trying to discount that. The fundamental bull case is still a pretty solid one. It's just a case of markets aren't really able to focus on that at the moment, because you've got all of this headline noise and headline risk that is kind of clouding the backdrop. So yeah, certainly not panic stations, the S&P being 1.5% off a record high. But nonetheless, I think that goes a long way to explain some of what we've seen this week.
Absolutely.
I was expecting something there, but never mind.
Absolutely. Anyway, no. I was absolutely. Do you know what I was doing? I was actually just calling my notes up for UK GDP, because I know that's what we're about to talk about. See, I do.
Very good. Well,
this is how far I've come. I actually put notes together in the morning when I was waking up with KFC on my chest, or in your case, Five Guys. Hey,
Jesus Christ. What the hell was I going to talk about? Oh, yes, that's right.
UK GDP, hopefully.
Well, we'll get on to that in a second. Just a few headlines from yesterday, first of all. In the geopolitical complex, it appears that the likelihood, for want of a better word, of any imminent US intervention in the region has been diminished over the last 24 hours or so. Trump was talking in the Oval Office last night, saying that his sources have told him that the killing in Iran is stopping, and that he's been informed there is no plan for executions or hanging of protesters in Iran. The one thing I would say on the back of that is markets have obviously got very excited. WTI gave up all of yesterday's gains, trading back below 60 bucks a barrel on those headlines as well. I'm no military strategist, but one thing the Trump administration do seem quite keen on doing is creating what I guess you could call strategic ambiguity, basically trying to...
Oh, I love that. That's a magical phrase.
Oh, thanks very much. Basically trying to keep the other side on alert, really, and surprise them. And by saying, we think that everything's all right, the other side could start to rest on their laurels and then you strike. I'm not saying that's going to happen, but there is still obviously some degree of risk in terms of intervention in the region. In terms of other bits and bobs from yesterday, expectations around the Japanese election continue to ratchet higher. The leader of the Ishin party, who are the mob who currently rule in coalition with the ruling LDP, if that makes sense, he was saying that Takaichi is going to call a snap election at the beginning of the parliamentary session. And of course, the Diet returns on the 23rd of Jan, which is next Friday. And then we're likely to have a very, very short election campaign indeed. Other than that, we obviously have some opinions from the Supreme Court in the United States, but they once again did not make any ruling in the IEEPA tariff case.
There's a quiz at the end.
Yeah, exactly. That is, of course, the second time that we've all got very excited about a potential ruling and then didn't get one. As of now, the Supreme Court has not yet set a date for further opinions to be issued, but we, of course, continue to keep an eye on that one. And just to lead us in to our conversation that we have about UK GDP in a second, before those numbers, yesterday we heard from the Chancellor, Rachel Reeves, who said, and I quote, "Judge us on our record," when she was asked about the number of U-turns that the government has made. Well, Rach, sorry, your record's fucking terrible, so I'm not sure you've helped yourself with that one.
So hang on, there's a long list of U-turns and how bad they're doing, and she wants to be judged by that.
Apparently so, mate. Apparently so.
And from an he's for BOE chief bigwig and a chess champion, you think she would know better than that.
Yeah, well, it's all right, because her new best mate, Dario Perkins, is going to be along to defend her in a second.
Oh, he'll drive up to Fred Needle in his gold BMW.
I'll see it shining from my office down the road.
Blinded by the light.
Either that or his head.
Mate, you got to be careful if you're going that way, glass houses. But anyway, right, let's have a little rant about UK GDP. Michael, do you want to take? Well, I'll tell you what, I'll frame it. So obviously November's...
I was going to say, you've got your notes, mate. Might as well put them in.
So obviously we had the GDP data out today, up 0.3% month on month versus the 0.1% expected. However, and it's only Michael that I've seen that's flagged this, anyone saying, well, I'm waiting for Labour MPs, specifically Rachel Reeves, to come out and say this is a great sign, the economy is recovering. It's not, because if you strip out Jaguar Land Rover's cyber attack recovery, which you may remember knocked off a few percentage points or basis points off the figure before, and November, if you remove that, looks far worse. The 3-month trend is barely positive at 0.1. Construction absolutely collapsing. I think it's the weakest 3-month construction growth. That was minus 1.1%. That's the weakest since March 2023. It's a bad place to be. But that won't stop Labour MPs saying this is the best thing ever and proof that they're doing well. And if anyone does that, please share with them the infographic that I've just put up on Twitter. But yeah, Michael, give me your takes.
Well, no, I think you've hit the nail on the head. I mean, the economy has returned to growth in November by growing by 0.3%. However, all of that growth is mechanical in nature. And what I mean by that is, Jaguar Land Rover suffered this significant cyber attack. I think it was September of last year. And they basically had to shut down all production. And they are one of, if not the biggest automobile producer in the UK. So the impact that has on GDP and on economic growth at large is very, very significant. And you've got to remember here how the data is calculated. What we're doing is comparing output in 1 month, in this case November, to output in the prior month of October. Now, if Jaguar Land Rover, and I haven't got the exact figures in front of me, but if they produced a total of 0 cars in the month of October, and then they produced 1 car in the month of November, well, that's a 100% increase in production. Now, that's an extreme example, but it gives you an idea of how significantly the data can be skewed by what's happened here, because it's similar to what we saw during the pandemic when the entire economy shut down, and then all of a sudden when lockdowns were lifted, we were having, non-farm payrolls prints in the US of like 6 million or whatever it was. It's not because the economy is booming, it's just a mechanical rebound because everyone's gone back to work. And that's exactly what we're seeing here. And I think we need to be very, very careful. Of course, there's going to be a lot of political spin around the numbers, but I really don't think we can extract anything really in terms of signal from what the data is telling us. And we certainly shouldn't be saying, the economy grew by 0.3% in November. Everything's fine and dandy. The pre-budget uncertainty wasn't as bad as we thought. We're firing on all cylinders and we're moving into 2026 on a really solid note. If the December print comes in solid as well, then yeah, fine, I'll let you have that one and I'll hold my hands up and say maybe I was too pessimistic. But right now, I think that the any enthusiasm around the data that we've seen this morning is misplaced. I think it's also misplaced that we've seen a modest hawkish repricing of rate expectations. The curve now has 47 basis points of cuts in it by the end of the year compared to the 51 basis points that we had yesterday. And I think really for anyone who is observing or trading in the UK or the UK economy, to me, it's going to be next week that's really pivotal. The data we got today is, one, distorted, as we've said, and two, it is very stale. November feels like a hell of a long time ago at this point, whereas next week, we're going to be getting the latest labour market numbers. That comes on Tuesday. We'll then get inflation on Wednesday, followed by public borrowing on Thursday, and then the week wraps up on Friday, next Friday, with the December retail sales numbers, which is obviously pivotal, given that covers the Christmas period, and also January's flash PMI numbers. So, we've got 5 really, really important data releases here in the UK next week. And I think much more so than the GDP numbers today is going to be those prints, primarily the jobs and inflation data, of course, that really kind of set the tone for how the economy is looking as the new year gets underway.
No, absolutely. I'll make you right on all points. I think one really telling thing for me is these construction numbers and this GDP data. They are fucking horrific. So public housing new work crashed 10.8% in November alone. And the 3-month construction growth is down minus 0.1, as I said before, week 6 2003. Private commercial construction as well, down 4.5 on a 3-month basis. And the problem is there's no catalyst on the horizon to reverse this. And I think that's the scary thing, right? It's not like, we haven't even got, the national insurance stuff hasn't even taken effect and all this kind of. So the things that we've got waiting in the wings aren't growth. They're kind of, they're the opposite. They're the antichrist.
No, you're absolutely right. And I was chatting about this with our mutual friend Michael Hughes over at Guinness on Tuesday. And we were both, well, sorry. I mean, oh well, you'll get over it. The nub of what we were saying was, exactly what you said. The biggest issue is that not necessarily how dire the situation is at the moment, it's that there's no kind of obvious way of getting out of this. Certainly from you and I can sit here and we've proposed ways of boosting economic growth and escaping this fiscal doom loop, et cetera, but the powers that be either seem unable or unwilling to come up with any ideas that might help matters.
Yeah, no, exactly that. But if like I said, please do give me a nudge. Anyone that on Twitter sees Labour MPs saying about how great growth is, because I really am in the mood to tear someone a new one.
Has that Tris Osborne woken up yet? He'll be the one.
Well, one of my favourite Twitter accounts at the moment. Have you seen the Trisonomics, the parody of?
Yeah, but the problem is you can't tell the parody apart from the real one.
Mate, you say that, but for the first week or so following him, I was replying to the guy, mugging him off, saying you don't know what you're talking about. And then I realised it was a fucking parody. It's so well done. It's brilliant.
Whoever is running that, I'll buy you a beer if you're ever interested.
I've got a feeling it might be someone we know, but I'm going to, maybe it's W.O. Perkins. But anyway, Michael, what have we got to look forward to today?
Well, yes, indeed. In terms of today, I did just want to very briefly just touch on the retail sales figures we had out of the States yesterday. I won't go into this in too much depth, but we did see quite broad-based retail sales growth in November. Headline sales rising by 0.6% on the month. The control group metric rising by 0.4% on the month. Of course, control group broadly is the basket that feeds into the GDP numbers. November retail sales, very, very important in the States. Obviously, Thanksgiving, Black Friday, Cyber Monday, etc. And it wasn't only those strong headlines, we also had quite broad-based sales growth with 11 of the 13 categories that attract notching month-on-month increases. So despite the labour market showing signs of stalling and faltering, it appears that the US consumer is still happy to spend for the time being.
One caveat that I would like to apply for this is I think retail sales did did reaffirm this K-shaped recovery, because retail sales was definitely the good news from retail sales was skewed definitely to the higher income households. They were the driver of growth. And I think it's just something to keep in mind that, especially when you got like the tax implications, etc., are definitely kind of favoring the higher income.
Yeah.
Lower income are slightly struggling. So yeah, just wanted to be aware of it. I know some economists have dived straight into that data yesterday, and they did come out with, pretty much all of them came out with the opinion that it was very much driven by the wealthier households, should I say. So
yeah,
underlying economy still might not be as great as these headline data suggests. And again, this is why we sometimes have to look beyond the headline grabbing figure.
Absolutely. And just lastly on that, I think it was Moody's put out a note, it must have been the back end of last year, by their estimates, around half of US personal consumption in 2025. That came by virtue of the top 10% of earners, which is the biggest share that entire
and I think
income group has ever had. So certainly something to keep an eye on, because your consumption base is relatively narrow ultimately.
Yeah, and I think this is indicative of why sometimes we see data come out and we see the man on the street say, well, this is bollocks, because if I'm struggling, all my friends are struggling. Yeah, no one's saying you're not struggling, and the data isn't manipulated. It's just the methodology of the data sometimes gives incomplete pictures. No one's lying. It's just the way the data is produced and the way the data is gathered, and etc., and then presented. Sometimes it can be a bit skewy. This is why you look beyond the headline print. This is why you see people like swearing blind that CPI data is faked. It's not faked. If you look into the baskets of what make it up, you'll realize where this increase has come from, where this decrease has come from, and it might be that has no relation to your life, which is why your side of the equation, from your window, it is wrong. But, we're trying to gather like data for an entire country, which is why, it's never going to fit everyone's personal situation. So again, just something to be aware of when you see people saying this is definitely a lie, it's definitely a lie. Yeah, it might be in your framing, it might be wrong. And unfortunately, we can't give out inflation data for every individual.
No, and to be honest, it would be completely fucking useless if we did, because all you do is then come up with an average and you get back to the CPI number that we look at anyway. So there'd be no point in doing it. Anyway, as for today, it is a relatively light economic docket, actually. At 10 o'clock this morning, we get the latest industrial production figures out of the Eurozone. This data is very stale. It references November production seen having risen by 0.5% on the month, compared to the 0.8% rise that we saw in October. And then across the Atlantic at 1:30 this afternoon, we will be getting the weekly US jobless claims figures. Initial claims expected at 215,000 in the week to the 10th of Jan, pretty much unchanged from the 208,000 that we saw last time out. Continuing claims, meanwhile, seen at 1.9 million in the week to ending the 3rd of January, down from the prior 1.914 million. Do bear in mind that neither of those prints coincide with the January non-farm payrolls survey week. Other than that, bank earnings wrap up today with Goldman Sachs and Morgan Stanley reporting before the market open. We also hear from BlackRock before the market open today. And in terms of speakers, quite a busy calendar of Fed speakers in the mix. We're due to hear from Bostic, Barr, Barkin, Goolsby and Schmid as the day progresses. And of course, market participants will also continue to focus on geopolitical developments, not only in the Middle East and the situation in Iran, but also Venezuela. I believe that Trump is due to be having lunch with, I've forgotten her name now, but the lady who won the Nobel Peace Prize. So we'll see if anything comes from that.
I thought he was having lunch with the VP. Oh, maybe I've completely misread that then. I was quite tired when I read it. There you go.
I can tell you, hang on, stay there. Mikado. Yeah, so it is the lady who won the Peace Prize.
I just said Mikado. Do you know why I remember her name? Because it's like the chocolate.
God, right.
You need a system,
on that note,
mate, you need a system. You need a system for everything like this. This is why, like I told you, like the month codes for equities, hummus.
Yeah, that is actually very useful.
And now you use it yourself, don't you?
I do.
There you go. Taught him everything he knows, boys and girls. Right.
God. On that note,
how we get these to finish dead on time every time, I have no idea. It's purely by chance when it's probably you, isn't it? You probably have an idea of when we should be finishing.
Well, just consummate professional.
I just look up when it's 9 o'clock. I go, oh, that was lucky.
Right. Well, stop waffling or it ain't going to be 9 o'clock anymore.
Sorry. Bye. Boys and girls, thank you so much as always. We hope we've added a bit of value today, put a smile on your face, all that bollocks. We'll see you all tomorrow. Much love. Bye.
See you later.
Hang on, quick. Final joke. Final joke. What's the easiest way to talk to a giant?
I don't know. Someone to lift you onto their